The economic ripple effect, it could reach American consumers and businesses if the conflict widens. Joining us now this morning to talk about it is Dr. Thomas Duncan, an economics professor at Radford University, to break down what it could mean for the U.S. economy. Thank you so much for joining us.
Good morning.
Good morning. Well, we're also hearing about disruptions around the Strait of Hormuz. How quickly could that instability there translate into higher oil and gas prices here at home?
Certainly in the short term, it could be very fast. And so I was this morning looking at some of the traffic patterns that go through the strait there. And so it's slowed to almost nothing. And so once that happens, the oil markets are really forward looking. And so if they expect this to go for any length of time, you'll start to see oil prices rise pretty quickly. You'll start to see gas prices also rise pretty quickly in response to that. It's obviously a lot of moving parts into what we're playing with, and so lots of questions remain about how likely is it that they can keep the strait shut down? How long is the conflict going to go on? I know that there was a little bit of volatility in the markets recently, as the president said they would be willing to have the Navy protect ships that sail through the strait, and that they'd be able to federally fund some of the insurance costs. Now, all of that is inexpensive and is a cost to the U.S., but those kinds of things add to the volatility of what should the market be expecting currently. But at least for right now, it looks like the prices are rising, and they're rising relatively quickly.
Pardon the interruption. Here at home in the nation's capital, what economic effects could we start noticing first? Are we talking about gas prices, shipping costs when we order things, or what should we look out for?
You'll likely see it in the gas prices, and then you'll see it likely in travel. Jet fuel is not cheap in regular times. It's certainly not going to be more cheap now. And so you'll start to see that. In the sort of medium term, there's a lot of products that are made with oil, and so those might start to see some rises. Likely there's a stockpile of them, but if you think about things made out of plastic, that takes some amount of oil content to get that. And so you might start to see, and let's call it the medium term, you might start to see some prices of those rise as production changes or shifts. And there are ways to get around the strait for many of the companies, but they're also not going to be cheap.
Economists like yourself talk about something called mission creep. What kind of long-term economic cost might this conflict create for the American taxpayer?
So, in going in without like a very clear stated goal or an end game for what it is that they're seeking to do, there's been various reports on what that is. What that can lead to is that we start with let's get rid of the nuclear arms, and then we end up in some form of regime change. The war has already started with just air, and now it's moved to Navy. And so if we look at doing long-term regime change and the US government wants to be part of what that regime looks like, that likely ends with troops on the ground. And if that's what ends up happening, then that means a much longer term war and a much longer term impact. And so the idea is that while we're there, let's do more things if you don't have a really clear stated end game. And so the longer that goes, there's a very different level effect of each one of those paths in terms of time, in terms of resources, and in terms of the manpower that's going to be necessary in the area.
Dr. Thomas Duncan is an economics professor at Radford University. Thank you so much for joining us this morning.
Thank you.